So in trading, obviously, there's over trading, over risking, taking too many trades in a day, whatever it is. But then there's also not being too um, like withholding of risk and being, what's the word, like too idle, as in you'll just get analysis paralysis on the charts whenever you're about to, say, if you're about to buy or you're about to sell. You'll then think of everything against that trade that you're about to take, which then prevents you from pulling the trigger. So it's more just having the confidence in your model and in what you see in the market, because if you've been trading for, I don't know, a few years and it still hasn't worked or whatever, you should know from market experience when conditions are good for your model, your system, and when the market is bad for it. So say, I don't know, it's a day after a bank holiday and it's no news. Normally, price, well, from my experience, isn't going to be the best. And if it is less volatile, if it is doing a lot more wicks on the higher time frames, that's, for me, is when it's less probable, because I want to be trading when there is volatility in the market, when, because I want to be in my trades, I want to be in and out, I want to be in it, take my profits and be out. I don't want to be seeing choppy price action, it come into my entry point and then going back up, then going into drawdown, going like, you just want to see clean, straight action. And you should know from, well, just through, I don't know, years of trading, or if you haven't traded for a long time, years of back testing. And it's to more just be comfortable. Like, you shouldn't be scared to take a trade, because you should already think in your head, my my setup has formed here, and I've got nothing but confidence, whether it wins or loses, that this is just the part of probability. This is just over time. If I take these trades constantly, then that is where my probability over time works out. And it's not to say to, obviously you should be waiting for your best setups to occur, but if there's one thing going against your um your trade that you've just took, whether it's just one thing of like, oh, it's in a, I don't know, let's just say a 4 hour FEG, but realistically you've got to think that, because most day traders, I only trade through about an hour to an hour and a half, 9:30 till 11. I'm only catching 1 hour of the day. I'm not waiting for this full day. Say if it, you could even be in a long trade and you know that that daily candle is going to close bearish, but you know that there's internal draws to the upside and there's a perfect setup for them. You know that there is going to be pullbacks throughout that day, so you should not be scared of, say, something going against you which won't even matter in your trade. So like, that's just like a vague example, but it's more so just don't, if the perfect entry is there, just don't hesitate if something that you've learned before, which isn't even a part of your model, is like eating on your brain on that entry. So it's more just, yeah, just being at one with the model that you trade. And well, even I struggled with it last week. Like, I was seeing my setups form, and even if they weren't the best of the best, it was still there, with reason, with drawing liquidity, with all this stuff. But I was hesitating if there was like an SMT on an internal high which wasn't even on my draw. But I think that's where you've just got to trust and have faith in your model that it is going to play out, and if it doesn't, then it's just all a part of probability. So it's sort, I'm more just talking about, there's, because everyone knows, talks about overdoing it, over doing all this stuff when you can sometimes underdo it and be not putting on that pressure that you should be of like pressing the button to actually buy or sell when you should be. And it's more of just like being emotionally attached to your account or to your funded, especially if you're struggling financially. That is when it will play a big toll on you, as you will be more attached to them funded accounts, when obviously it's not a good thing. And especially in eval, you shouldn't really be attached to. You shouldn't be attached to them at all. But more so, I know, well, for experience and other people, that if you have a past account, you paid for the activation fee, all that, then there is going to be like some sort of thing in the back of your head of, oh, I don't want to lose this. And obviously you don't, but you need to just think, it's not actually my money. And you're don't trade as if you're actually trading with 50 grand. Like, don't idolize that funded account as if that's actually 50 grand of your money, because it's not. It's just paper trading. The most you'll pay for 50k is probably like well, on futures, probably like $200 or about 150 quid. But just remember that it's not actually as much as you think it is. But in order for you to get that ROI, return on investment, you actually have to trade your model. You have to actually execute. You have to actually take them trades that you are confident in to then obviously get to that payout. So yeah, just trust in yourself, trust in your model, and trust that probability will play out over. And don't get scared of external factors when entering a trade. When just be confident. So yeah, God bless.